Good afternoon, traders. Chris Bus here with an early afternoon update for Thursday, January 13th. It is 1:30 as I'm starting the video. We've had some technical events that I want to bring you up to speed on. And if you're new to the channel, welcome. Please run your video player at 1.25 to even 1.5x to work through the material quickly. Okay, let's start with SPY. This morning we said 470 was the key. Well, that broke. We had gone up. We reached the prior day high, and that was rejected yet again. And then we dropped down below 470. I think you got to be very cautious, depending on your time frame, of course. That caveat always holds. To get back on the right track of this chart, SPY's got to recapture 470. That is the top of a $20 trading range that spans 470 down to 450. So price has really got to recover that to get back on track. Now here on the 30-minute chart, you see that trading range that we had carved out that looked a lot like a bull flag. Well, that bull flag has been invalidated. Why? Well, because we dropped below it. And now I've put on the fib retracement tool, and you can see that we've come back 38% of the advance. And so now your line in the sand is 467. Why? Because that's a prior low. You see, or that's the low of the day. Whenever you lose a low of the day, that usually brings in more sellers. You can see that right here we had 3 candles come down and reach our support level, and you can see the large volume over price bars here showing you that 467 is the bottom of this support range. So any kind of break of 467 this afternoon would most likely open the door down to 465 and possibly even 463 down at the 50-day. And that's going to be a very, very important level. I wouldn't be surprised. You can see right here, it's a live chart that looks like price is being stopped right here at 468.50. That remains to be seen. And I wouldn't discount the possibility of, a breakdown, a back test of 470, and then down. Of course, that would all be predicated on, of course, breaking this high right here at 468.50, the top of this prior candle. So be dialed in to the next downside support level at 467. But the key was now we're back in the range below 470, and that is something the bulls did not want to particularly see. Moving on to the Qs, I got a 2-hour chart here. We had said this morning 390 was the key, and I've denoted it here with these red arrows. Made another run at it this morning, could not do it. And that's the confluence of the 50-day and technical resistance right there at 390. And the bulls just kind of lost power. I did not have this this bear flag penciled in this morning, but regardless, we knew that 390 was a key pivot point. Couldn't do it, and then when it broke the bottom of this range here at 386, then you got a really, really fast move down. And you can see it here that we went down and we touched that key support level at 380. And that is the bottom of a $20 box that spans from 400 down to 380. We've already breached that once on this drive lower. So now your key levels below are 380 and 378. I've got that marked as a support zone. So depending on how aggressive you want to be, you can either get short at 380 or 378. Honestly, I would, if I'm not in, if you're not short already from higher levels this morning, I would wait for 378 to break. Give up that $2, and then below 378, you've got $8 of downside here, and I think that would be a more confident trade, because this really is a zone, and you could get, go down here $1 and then have it bounce. So if you're not in already, I would wait. If you're, depending on your time frame, if you got short from up here, I think you can, if you didn't cover already at 380, I would just kind of hang in this trade and have your stop above wherever you want to say, okay, it looks like we're going to bounce, but it looks really weak at this point. So maybe comes down here to 380, 378, and kind of that's it for today. I mean, we're down. We're only down 1.5%. We could certainly go down farther if in the afternoon. Anybody that got in here that's still in is probably getting cold feet at this point, like, giving back a bunch of gains. So anyways, I wouldn't be surprised with another test, but just go level to level. That's where your personal trading style and your time frame is going to make a big difference. Whether you got short, you covered, and now you're going to wait for the next leg down, or you got short and didn't cover, figuring this is going to be just a little bear flag, and then next leg down. So either way you cut it, not particularly bullish. IWM, let's jump to the 2-hour. We talked about this bear flag this morning. It broke. Still not able to get above the 200-day, and we, anything below the 200-day is by definition a bearish chart. So we haven't. I mean, we're flatlined here, but we made a run up and then we broke down. So actually, IWM is doing the best today, just by holding its own. Taking a look at the 30-minute chart, we made a run up to 218 and stalled right there. So if you got that short, that was an excellent trade. You got, a couple bucks out of it relatively quickly. Let's move on to Facebook. We had this thing that looked like a bull flag, had a fake breakout this morning, came back into the range. That's never a good sign. We talk about that almost every day. Right down to the bottom of the box, and then you had follow through. And we said if it broke down, your next level of support here is at 327. So I would be keying off of that. If the bulls can reclaim 330, 331, that's going to be, averting disaster, as it were. But if they lose this 327 level, then you're going to come down to 324 almost immediately, I would imagine. Here's Apple. Same setup. Lost the flag. We said if it lost the flag, it's going to come right back down into support rather quickly. That's exactly what it did. Now you've got a support zone here between 173.50 and 172. We'll see if that can hold it. But if you got, if you got this breakdown, you got a very nice fast move if you were on top of it and had your alarms. Tesla ran into trouble here at this prior high at 1120, got rejected. Now it's dropped below that key pivot point that we had been talking about at 1080. And for my money, bulls got to reclaim 1080 or it's heading lower. Your next support level is 1040 and then back to 1,000. And one thing to note, I didn't make a point on all these charts, but look at the posture of the PPO. We had the rally, and now PPO has put in a bear cross, and RSI has dropped below 50. So when you're looking at, your price action, always keep in mind your indicators. And if you see bear crosses at or near the zero line, that's usually a very, very bad sign, because the bulls were not able to take momentum truly positive. They had a positive run, but they weren't able to hold it above the zero line, and now we've rolled over. So any further weakness here is going to bring PPO back into its bearish regime, and you can see that RSI has already moved below 50, so that's bearish as well. Microsoft, we said, was really, really weak this morning after this deep drop, kickback rally to the prior lows, and it died. We said watch 319 like a hawk. There was a $4 gap there down to 315. That filled. We said if the bottom of the gap does not hold, that's the last chance. And they didn't hold it. And now we had a quick move down to 310. So right there is, honestly, $9 almost in a straight line with no, scary kickback candles or anything like that. Straight down. So now my expectation is to come down and check, revalidate this low. And if I were short from 319, I would be covering here at the prior low. And then, if it keeps on going, then we can reinitiate a short. But I would expect a some kind of bounce here at 306 at this prior low. And the thing to watch going forward is, let's just take this scenario. Comes down, finds some support at 306. This PPO momentum rolls over and then starts to curl back up. That's your double bottom with bullish divergence in place, and that usually is a very nice opportunity to get long on that double bottom with bullish divergence, if that in fact is what develops. Amazon. This is why I draw the lines, guys. Honestly, we talked about this 315, and we talked about all these prior lows being resistance. We got this rally. We got a flag, and then it dropped out of the flag. And we said if it dropped out of the flag, you're coming back here to 32.45 in a heartbeat. That's exactly what we got. And now it's breaking below that. So what you can do is, if you got short, then you can move your stop down to this 32.45 level and then see if it proceeds, and if somehow it gathers support here and breaks back above 32.45, you can take it off, and you've got, you got about a $60 gain from 33.15 down to 32.45. That's $60 kind of thing. So that ain't all bad for a morning's worth of work, right? So but it looks like it's breaking below. So down here, notice there's no technical support. So if it gets much past this 32.45, not a lot stopping it from coming down and revalidating these prior lows. Google, more or less a fake breakout. They reversed it, came back into the range, bottom of the chart, had the open gap to fill, which it did. Now, 27.85 is your line in the sand. It's down 1%. It's not horrible. So this basically is a back test of this 27.85 level. And if it holds, then, the bulls can stop the bleeding, have an up, an A, B, C move if it can hold together. But keep in mind that the Fatman complex is weak. I mean, Tesla's down 3%. Apple broke down. Microsoft ultra weak. Facebook below the range. So, I mean, can Google do it? Yeah, it's been a strong chart, but I don't like to particularly go long in a complex that's doing poorly. You know, it's much harder to have a standout stock. Birds of a feather flock together, and if they're going to sell mega cap tech, they'll find Google as well. And even if you're right, the move will be, you know, very muted. Netflix falling apart, 2.5%. We said don't do anything here. You got to wait. Let's see how it reacts at 5:15, and then we'll have a decision to make whether to, based on the price action. You know, if it breaks below 5:15, I would say the bottom of the box down here at 470. So it's a very important level here at 5:15, right in the middle of the range. And remember, our default, again, back into an old trading range. Your target's the bottom of the range. So that's my default. But at a place where they could save it is 5:15 and maybe get a little kind of kickback rally there. So anyhow, waiting for clarity on that one. Semis, fake move, big gap up, put in a high here this morning, and then they slammed it back into the gap. That was your chance to get short on the gap entry, and you got a full gap fill. And now the key level is 302.5 as support. So watch that. But that's a backfill, gap backfills. That's the thing you've always got to be careful of when you have a gap like that, is the potential for it to fill. Doesn't always fill, as quickly as this one, but that's always in the back of your mind. You much rather see the top of that gap hold than have it fall apart. And so if you were a buyer here, a buyer on the open, and you had your stop in place, you would have been pretty disappointed that it came back and clipped your stop. But if you honored that stop, you're a lot less disappointed after you see this, right? So that's why it's so important to have that stop in place and honor it, because you just don't know at that point whether it's just going to clip your stop and reverse or just keep on going. And that's where you really get hurt, especially if you're trading options, short dated. You never want to just hold on and hope that it reverses. XBI short continues to work. We'll have a decision to make when it gets down here towards 95, 96, whether we want to cover that or let it go. Kind of be a game time decision. ARK is falling apart. Whenever you see, not so much with ARKF, I mean, it's down 4%. But when you get into, ARKG is down 3%. ARKK is down 3.75%. We saw on ARKK, we've talked about that being a proxy for Tesla just because of the percentages that ARKK holds. When you see Tesla being down 3%, almost impossible for ARKK to be green just because of the heavy weighting that it has within this ARKK ETF. And let's wrap up with ARKW, down 3.5%. So those are all working. That's great. XBI is working. I think Bed Bath & Beyond kicked up a little bit above 14. I'm going to sit tight here for a day or so and see how that reacts. I haven't looked at it in the last, 4 hours or so. But other than that, I mean, watch the downside. We've broken some key levels. At least at this point, it seems like the rally has run into some trouble. So let's watch it carefully. And whether you're long or short, have your stops in place, especially if you're, very, short-term trader. It's been my experience on weekly options. If it's not going for you, it's going against you. And that sounds simplistic, but let's say if you're long, even if it sits there and does nothing, you're getting eaten up on time decay. So be nimble with that. And if you get the sense that it's just not working, it's probably not working. Get out, recalibrate, so you don't lose all that premium while you're waiting for something to, reaccelerate. It takes 10 seconds to get back in if you decide that you were wrong. And on most of these names that we are actively trading, the FATMAAN and the indexes, your slippage is quite small, very tight bid-ask spreads, and that's one of the reasons that I really like them. If you get into some of these other names that are not as liquid, you pay a price every time you do a round trip because you're getting slippage on the bid-ask spread, and on something like SPY or the Qs or IWM, that spread is literally pennies. So it's not quite as bad as some of these other names that you may be interested in trading. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.